Today we'll discuss CapEx management that will increase the success rate of capital investment. Hi, this is Magnigami, Lean Sigma Black Belt. Today's topic is from this video request. Sir, make video on CapEx management. Thanks, Patel, for your video request. CapEx stands for Capital Expenditure, which includes not only facility investment, such as purchasing land, buildings, machines, but also a large-scale IT system, etc. Its return on investment may not come soon, and maybe several years later. It will be uncertain, and in case of failure, will give you significant losses. Therefore, an investment decision is very difficult. Proper CapEx management will include good guidelines and tips and how to increase the success rate of your investment. There is another term, OPEX, which is the opposite of CapEx. OPEX is an abbreviation of operating expense. I made a comparison table about them. CapEx is a long-term investment. On the other hand, OPEX is a short-term incurring expense. Regarding purposes, while CapEx is for gaining future benefit, OPEX is the expense that must be paid to maintain daily operations, such as rent, labor, utilities, and office supplies. The important thing here is that all the OPEX expenses appear in your income statement, and it's easy to manage them because you'd check the income statement every month. On the other hand, CapEx items show up only partially as depreciation in the income statement. Since there is no standard accounting method for managing capital investment, CapEx management will become more important from now on. Let's look at the flow of CapEx management. All capital investment is a project. Therefore, know-how of project management is very beneficial for managing CapEx. It's a good idea to first write a project charter to define this investment project. There is a video and template about how to make a project charter. This is the project charter template. You would write why you need to do this project, what you will do in this project, how this project aligns with your company direction, the purpose of this project, time period, and budget. Writing a project charter will clarify the purpose and enable you to plan and manage future investment projects effectively. Next, we would like to make a detailed capital investment plan, but we cannot do that right away. Before that, we need to complete various other plans. Start with sales planning. Clarify where, to whom, how many, and how much to sell. If you are in a manufacturing company, this will also help you make a production plan. From the sales plan and production plan, you can make a cost plan, which includes a purchase plan and personnel plan. Only then can we consider a concrete capital investment plan. When considering investment project, it's rare that there's only one project idea. Moreover, you should have multiple project ideas in order to choose the best project from among them. For that, it's important to know how to prioritize the project. I made a video and template about the return on investment, so please check them out. Consider making the scenario of expenditure and income as detailed as possible and make an analysis of each investment project. Then you can prioritize your investment ideas numerically. Once again, capital investment is expensive and difficult to forecast, and in the case of failure, it often causes more loss than the investment amount. So let's establish the approval workflow of who approves those investments, including experts. If the plan or analysis is not good enough, you can check it systematically and have it reconsidered. It's also important to document all approval steps in writing. In case of failure, the location of responsibility is clear. These days, there is specialized software for investment approval workflow. You can also automate it yourself using Microsoft Flow or Power Apps. At this point, you can finally make an investment, but you should not stop the project here. The absolute condition needed for any success is to apply the PDCA cycle. Although an investment is expensive, it's often the case that that project was finished when the investment was made. Be sure to periodically apply a PDCA cycle, such as checking if each investment project is progressing as planned, or correcting the direction if it's not. For that, don't just check the financial statements, but also it's important for the created business plan to shape the employee's action plan and formulate their KPIs, and use them in the PDCA cycle. This concludes the CapEx management topic. I reconfirm that project management skills and applying the PDCA cycle are so important in any field. Thank you very much for viewing. Please click the subscribe button. Also, click and watch my other related videos. Thanks.